Welcome to the deep dive. Today, we're going to be talking about some pretty big regulatory changes that look like they're coming up in the Abu Dhabi global market.
That's right. These specifically affect legal, company, and tax service providers.
And our source for this is the ADGM Registration Authority's own consultation paper. It's number 5 of 2025, just issued on May 16th.
Exactly. And it's basically laying out proposed changes to the licensing rules. They're asking for feedback on these, which is important.
Yeah, and look, these aren't just small tweaks, are they? We're talking about changes that could really, shift how things work for professional services in ADGM.
Definitely. It impacts anyone already there thinking about setting up or even just watching how these financial centers evolve.
So our mission today is pretty clear. Let's unpack this paper, pull out the most important bits, and really talk through what these changes could actually mean for you listening.
Yep. Let's try and make sense of it all and look at the potential ripple effects.
Okay, let's dive in. First up, legal service providers. What's the situation right now, and what are the big proposals?
Well, right now, the focus for legal services in ADGM has mostly been on who gets a license in the first place, the applicant criteria.
Uh-huh.
There haven't been loads of ongoing rules once you're actually licensed and operating.
But that looks set to change, especially for anyone new wanting to set up shop. The proposals seem to, raise the bar quite a bit.
They really do. So first, new legal providers would have to be a body corporate or a partnership.
Okay.
And importantly, they need to have been operating somewhere else for at least 5 years.
5 years. That's quite a requirement.
It is. It signals that ADGM is maybe favoring more established firms, those with a track record.
What kind of impact do you think that 5-year rule might have on, say, smaller or newer firms wanting to enter the ADGM?
Well, it could make it tougher, no doubt. It potentially advantages the larger international firms that already have that history. It might limit the entry of perhaps more niche or innovative startup legal practices, at least initially.
Right. And there's more on the staffing front, too, isn't there? Minimum numbers and experience levels.
Yes, quite specific. The proposal talks about needing at least 10 qualified legal professionals across the whole group.
Across the group globally.
Yes, across the group. And within that, at least 3 need to have 8 or more years of post-qualification experience, or PQE.
Okay.
And the managing partner, or whoever's in the equivalent top spot locally, needs 10 plus years PQE.
So quite senior experience needed right at the top and within the team. That definitely sets a high standard.
It certainly does. It potentially impacts the cost structure for new entrants, too, needing that level of seniority from day one.
Now, that's for new applicants. What about firms already operating in ADGM? There are new ongoing rules proposed for them, too, right?
Yes, and this is a really significant shift. We're seeing a move towards much more continuous oversight.
Like what, for instance?
Okay, first big one. Professional indemnity insurance. They're proposing a requirement to have and keep cover of $2 million per claim.
2 million USD per claim. That's a substantial ongoing cost.
It absolutely is. Then there's compliance with the client money rules, the 2021 rules, making sure client funds are handled properly.
Standard practice, but good to see it explicitly required. What about staffing for existing firms?
Similar focus on qualifications. The proposal is that all legal staff, except trainees and paralegals, must hold recognized qualifications and be in good standing with their professional body.
So ensuring a baseline level of professional competence across the board.
Exactly. And there's a physical presence requirement, too. At least one qualified legal professional needs to be physically in the ADGM office during business hours.
Okay, with reasonable exceptions, I assume.
Yes, they mention things like court appearances, client meetings, that sort of thing. But the principle is having qualified staff on the ground.
And links into office space and sponsored staff.
It does. Minimum of 2 full-time qualified legal professionals actually sponsored by the ADGM entity. And a minimum office space, 8 square meters per sponsored employee.
So no more purely virtual setups, it seems. You need boots on the ground and a proper office footprint.
That seems to be the direction, yes. Plus, an annual return form.
Ah, more reporting.
Seems so. Detailing clients, services, employees, including their location and qualifications, and potentially other info the RA asks for.
So increased transparency for the regulator.
And on top of all that, adherence to core principles. Integrity, due care, confidentiality, transparency, cooperation, and crucially, managing conflicts of interest.
Which you'd hope firms are doing anyway, but it codifies it. Now, there was a point about combining licenses, legal services with other activities.
Yes, this is a key structural point. The proposal is to restrict legal service license holders from carrying out other controlled activities.
What counts as a controlled activity?
Things like company secretarial services, audit, and the new tax services category we'll get to. Basically, other regulated professional services in ADGM.
Okay, but there are exceptions.
Yes, two specific ones: compliance consultancy and tax services.
Mm,
A law firm could potentially also hold licenses for those two.
interesting. So a firm offering, say, legal and company secretarial services now would need to change things.
Potentially, yes. They might need to separate those activities into different licensed entities. This could have a big impact on firms with integrated service models.
But you mentioned the registrar might have some discretion.
Yes, the paper does say the registrar could potentially accept applications or renewals, even if they don't perfectly meet every single criterion. And there's specific mention of how rules might apply differently to trainees and paralegals.
Okay, flexibility is good. And any carve-outs?
Yes, dispute resolution professionals, so barristers, advocates, arbitrators, mediators, they're proposed to be exempt from some of these requirements, acknowledging their different practice models.
Got it. So timelines for all this for legal providers.
For new applicants, the rules would kick in straight away, from May 16, 2025, the publication date.
Okay.
But for existing licensed firms, there's an 18-month transition period from that date, so they have time to adjust.
18 months. That seems reasonable for potentially significant changes. Okay, let's switch gears to company service providers or CSPs. What's the story there?
Well, CSPs already have specific conditions set out in Schedule 1 of the Conditions of License Rules. That covers things like fitness and propriety, policies, insurance, staffing, compliance.
So there's already a framework. What's the main proposed change then?
The big one is very clear: an explicit ban on combining a CSP license with legal services or audit services within the same legal entity.
Ah, so that restriction we touched on with legal services applies forcefully here too. What's the RA's thinking behind that separation?
It really boils down to conflicts of interest and practical compliance issues.
How so?
Well, think about it. If your law firm also provides CSP services, and one of your lawyers acts as a nominated director for a client company, they could end up advising themselves, legally speaking, in their capacity as director. That's a clear conflict.
I see, yeah.
And there are concerns about confidentiality too, especially if the legal or audit side is dealing with sensitive information that could impact the CSP side, or vice versa, perhaps involving competing clients.
Okay, that makes sense from a regulatory standpoint, but what does this mean practically for firms that do currently offer combined services? It sounds like a major shakeup.
It could be. It likely means restructuring. The paper even floats the idea of setting up separate legal entities, maybe subsidiaries, with their own dedicated staff for the CSP work.
Separate companies, separate staff. That sounds like it could increase costs significantly.
It could, but interestingly, the RA seems aware of this and mentions they might allow these separate entities to share office space and administrative support staff.
Ah, okay. So trying to balance the need for separation with some operational practicalities.
Exactly. It's about finding that balance between strict regulatory lines and business reality.
And the timeline for CSPs to make these changes.
Same pattern. New applicants face the restriction immediately. Existing CSPs and the legal and audit firms currently holding CSP licenses get that 18-month window to comply.
Right, 18 months again. Okay, finally, let's talk tax services. This feels timely with the new UAE corporate tax law really bedding in.
Absolutely. ADGM already have a tax consultancy license, but this proposal looks to formalize things significantly with a new controlled activity called tax services.
Why the change? Just clearer definition.
Partly clarity, yes, but also reflecting the increased demand and complexity around tax now. The new corporate tax law is a major driver here, creating a need for more defined, regulated tax expertise.
Makes sense. So what exactly falls under this new tax services definition?
It's pretty broad. It's defined as applying tax principles to someone else's situation. That includes giving advice on non-UAE tax matters, think planning, compliance, structuring, risk.
Okay, international tax advice.
Right. And also representing people or companies on UAE tax matters. So that's compliance help, filings, advisory, dealing with the Federal Tax Authority, the FTA.
So covering both advisory and representation, locally and internationally. That's comprehensive. Are there qualification requirements being introduced here too?
Yes. They're proposing thresholds for the senior management of these tax service providers.
Such as?
A majority of the senior team needs to hold relevant professional qualifications from recognized bodies, think accounting, or tax qualifications. And they need at least 3 years of relevant post-qualification experience.
So, again, ensuring a certain level of proven expertise at the top.
Precisely. It's about professional standards matching the complexity of the work.
And what about ongoing obligations? Is it similar to the legal sector?
Very similar. Professional indemnity insurance, again, same level, $2 million USD per claim. Compliance with the client money rules.
Okay.
And adherence to those same core principles. Integrity, due care, confidentiality, transparency, cooperation, avoiding conflicts of interest. It's a consistent approach.
It really is. The impact here seems to be creating a much more formal, regulated space for tax advice within ADGM, likely boosting confidence, but also demanding higher standards.
That sums it up well. It professionalizes the sector within the ADGM framework.
Timeline for tax services changes. Let me guess.
You got it. New applicants effective immediately from May 16th. Existing licensed tax consultancies get the 18-month transition period.
Okay. Consistent across the board. So we've looked at legal, CSPs, and tax. Are there any kind of, general takeaways or overarching themes from all these proposals combined?
I think there are. There's a minor technical amendment clarifying how Schedule 1 rules apply, whether to the applicant or the licensed firm or both.
Right.
But the bigger picture, as we've touched on, is definitely a move towards tighter regulation, higher professional standards, and more client protection across these key services.
It feels like ADGM is consciously trying to level up its regulatory environment.
I'd agree. It seems aimed at enhancing its reputation as a serious, well-regulated international financial center, attracting high-quality providers, and ultimately building greater trust with businesses and investors.
But crucially, and we should stress this again, these are proposals at this stage.
Absolutely critical point. This is a consultation paper. The RA wants feedback by June 15th, 2025.
So the final rules could look different depending on the input they get.
And they certainly could. Stakeholder feedback is genuinely invited here.
Okay, so let's quickly recap then. We've seen proposals for stricter entry and ongoing rules for lawyers, including insurance, staffing, and physical presence requirements.
Yep. And the mandatory separation of CSP activities from legal and audit firms due to conflict of interest concerns.
Plus the formalization of tax services as a distinct regulated activity, complete with qualification and insurance demands.
Exactly. The potential impact is significant, potentially higher costs and restructuring needs for existing firms, higher barriers for some new entrants, but also potentially a more robust, trusted market.
It really forces a recalibration for many players in the ADGM ecosystem.
It does. It could foster specialization and perhaps lead to different business models emerging. But adjustment will be needed.
Which brings us to a final thought for you, our listener. As these regulatory gears shift in Abu Dhabi, what new opportunities or maybe challenges do you see? If you're operating there or thinking about it, how might these changes reshape your plans or the competitive environment for legal, company, and tax services in the region?
It's definitely something to mull over. And remember, this deep dive gives you the highlights. For the full picture, do check out the consultation paper itself, number 5 of 2025, on the ADGM website.
Great point. Thanks for breaking that down with us today.
My pleasure.